Hey everyone, and welcome to today's DeFi Drop, which features Nadia, co-founder of Lagoon Finance, the infrastructure for on-chain asset management. Welcome, Nadia. It's good to have you on.
It's a pleasure to be here.
Thanks a lot. I was just checking your website as well. Amazing numbers. Over 100 million in TVL, 2.3 million of distributed in fees, 70 plus vaults, 14,000 unique addresses, 18 chains. I mean, you guys just keep going. It's really impressive. And also at Portals, we've absolutely loved having our partnership together, and it's good to be working with you guys.
It's a pleasure is all mine. So thank you for being a good partner.
It's great. Well, I won't bore everyone with all that. So let's get started. I love to get a bit about
Mm.
people's background. So if you wouldn't mind, let's kick off with a bit about your background, how you
Yeah,
ended up building Lagoon, and some of the backstory on this, and basically what Lagoon actually is.
absolutely. So um, going back many years ago at this point in time, I trained as a lawyer. I got introduced to smart contracts quite early on, super niche back then, 2015. And then the thought that struck me was, oh my God, this is going to change the world of law and the world of finance completely. Of course, I pursued my very traditional career, working in asset management and finance mainly in the City of London. So working in hedge funds and big asset management companies that invested in everything under the sun, and VC doing like direct investments into deep tech until 2022, where I really got the chance to be on the ground, get my hands dirty in the DeFi ecosystem, and really like shape the space. It's been one of the most interesting opportunities and sectors that I've seen in my career. And of course, looking at the inefficiencies in traditional asset management, in traditional wealth management and finance, it's very clear to me that the settlement timings of traditional instruments such as T plus 5, T plus 3, T plus 2 will have to go. Some of the other inefficiencies of asset management and fund administration were archaic and not fit for neither the users on the ground nor the managers and the operators. So everything kind of led towards Lagoon. And then I met my co-founder Remy, who's been active in the space even like much earlier than me, and a true OG who's been deep in DeFi, computer sciences by background. And he reached out, raised his idea, and I was like, oh, yes, this makes so much sense. This is what will power traditional asset management.
That's cool. What were the initial steps you took into DeFi originally in 2022?
So I actually worked, so in 2020, I actually worked on a protocol that was building a revolving line of credit. So a revolving line of credit using smart contracts only. And that too resonated a lot. So if you know TradFi and if you know like the way economy works, a lot of businesses have a revolving line of credit. If you can, and that is powered by so much paperwork, so many contracts, so much DD. If you can do a revolving line of credit using smart contracts only, the operational gains are massive. So this is what I've done for a little bit, and just like looked and monitored and contributed to different projects through a few years before starting my own.
Amazing. And so you just met online?
No, we actually met through mutual friends. So yeah,
Okay.
me and our CEO met through industry friends, industry contacts in Bogota, Colombia.
Wow.
Yes, that was great.
Cool. Nice. Up and coming tech scene there. So a lot of nomads. Yeah.
A
So
lot is
I actually
happening
worked
here.
in my first job in crypto was in 2020, end of 2020, and the co-founders of that company actually met just randomly on a Discord channel and basically launched the first IDO platform there ever was and invented that sort of space, which was pretty cool.
There you
Um, yeah. Anyways, I'll kill small talk. Let's get stuck in.
go. Yeah,
So a bit on Lagoon's infrastructure or architecture.
yeah, yeah,
Just to set the scene here, Lagoon's built on a ERC 7540, okay, rather than the more common 4626. obviously for flexibility reasons as well, and it's common in your space. Your architecture uses safe wallets and Zodiac role modules for custody and execution. But can you walk us through in practice how that actually works? What does the day-to-day look like for a curator running a vault on Lagoon and all of that? It'd be great to get the full scope and, a bit of the curator journey.
So let me probably start from the ideation of the protocol and why we went out to build what we built. So Remy has many years of experience managing DeFi positions and managing DeFi strategy. So 2 years back, when we looked to have a tool and a protocol for ourselves to manage DeFi positions, we actually didn't find anything that was suitable for a strategy agnostic infrastructure that pools assets and allocates these at scale. The idea has always been to be as manager curator as strategy flexible as possible while giving the users the necessary protections that it requires. At the same time, we were also from the beginning institutionally driven. So this is the direction, and this is where the big flows will come from, and this is the TradFi and DeFi will converge. So we need that. So for us, it was quite important to give both the curators and the users the protection that they need. 7540 is an extension of 4626 and ultimately allows asynchronous flows. So in DeFi, the tradition for many years has been, okay, you click a button, you get a token back. So it's instant, it's simultaneous. However, not every strategy is fit for that type of simultaneous liquidity, right? So if you have complex strategies, if you have directional strategies, if you want to mimic the traditional flows of assets as it happens in traditional asset management, you need 7540. Because this is where the curator decides and the strategist decides when to serve the subscriptions and redemptions as they come into a queue. As you know, if you want to subscribe to an ETF, you want to subscribe to a fund, you want to subscribe into a pool vehicle in TradFi, you put your subscription, then you wait until NAV is settled so you get the price per share, but then to into a vehicle. That is done both for user protection, because you get a very precise price per share, but also for manager and strategy protection. Sorry if I'm going too deep into the weeds on this one.
No, it's perfect. Thank you. How do you handle liquidity or redemption timing then when markets move quickly? Does the curator still have full discretion, or is there some automation involved?
So the curators have discretion. They can implement automation, or they can do it on discretional basis. So they monitor the subscription and redemption queue. The one thing that Lagoon implemented is you cannot pick and choose whether you serve only subscriptions or only redemption. So you need to serve both sides at the same time. Of course, the onus is on the managers, on the curators, on the strategists. Lagoon as infrastructure tool is closer to how traditional asset management operates. It simply abstracts the fund administration function. So it enables managers, funds, hedge funds, DAOs, chains to manage flows, to have that accounting in place, to manage fees, to set different roles on the strategies and products that they want to launch. And we ultimately give users the flexibility. Do they want to use 7540? Is instant subscription and redemptions the preferred route for them. DeFi prefers synchronous standard and synchronous deposits and redemptions, whereas TradFi everywhere does asynchronous. And asynchronous is used for different reasons. For user protection, because you get like the most accurate, best price per share when you enter a pooled vehicle. And also for the strategist protections, when a certain strategy needs to be unwound, you actually take your time to exit and provide liquidity at the best possible price. And you also asked me like what type of automation do we use and how do we manage liquidity? Lagoon Protocol doesn't. So it's the different curators that decide what tooling and what methodology they use to manage the liquidity and to serve the redemptions and subscriptions as these arise. The one thing that Lagoon implements at protocol level is a protection of the user. So curator cannot simply choose to service subscriptions. They need to service both redemptions and subscriptions at the same time. And of course, just another technical detail, if possible and where possible, these are netted off for efficiency, for gas efficiency, and for management efficiency.
So I've obviously spoke to a few founders in this space, in your area.
Yeah.
And obviously we work very closely with other protocols as well.
Yeah.
There are more coming on board. The Vault infrastructure space is getting a bit competitive, but obviously competition's good, but also the horizons are looking great, right? TradFi moving over and all the numbers and metrics all pointing in the right direction, even though it may not seem like it right now in the market sentiment, but it is. Look, you've got Veda, Era, IPOR all building in this area. What makes Lagoon's approach different? And where do you think you have a good edge?
So I recently spoke to another partner and service provider that we use often, who've done a market analysis, a comprehensive market analysis of the Vault space. And his conclusion, and he also reached out to me and asked, so as far as I see right now, he said, Lagoon is the only one who doesn't impose any particular custody solution, where all the management of the strategies, management of liquidity, whitelisting of protocols happens in the chosen custody solution. And let me be crystal clear. So Lagoon Protocol was built by curators for curators, by risk managers for risk managers, by asset managers for asset managers. The choice of custody is a very important decision that a chain, a hedge fund manager, family office, a DAO will have to make. So Lagoon is the only one where we make the protocol completely agnostic and say, listen, the Vault is a smart contract that services flows, manages fees, and has certain roles and certain protections, but it's transient in nature. Ultimately, all of the flows end up in the chosen custody solution of the curator. So at present, we're the only one that do it like that. And I had this conversation just like a few weeks back. So I don't believe anyone else launched the same solution yet.
Okay, so you're giving them full flexibility on custody, and while others lock in, okay?
Yes.
But how does that impact scalability and trust from institutional partners?
So ultimately, the thought and the idea here is that it's the responsibility of the curators who are rapidly professionalizing, want to build and scale the businesses, and want to do well by themselves and their users, right? So it's a tool that should fit and accommodate any strategy, whether directional, market neutral, off-chain or on-chain. The most important part is, of course, the disclosures. So the curators need to make the right disclosures to show their users that what the strategy actually does and how it does it. And users can apply different safeguards and different checks. Of course, don't trust but verify. And Lagoon plays an important role in that. This is where we both have descriptions in every vault. We have the different roles listed. We have the different wallets listed. So curator need to list the curation wallet that, of course, can be checked on DBank and Octave, etc., etc. So it's not about restricting the curators. So I don't believe that every strategy will be smart contract automated and non-custodial. It's just not how traditional asset management work. And it's impossible to imagine any strategy to be run by a smart contract. It's not going to happen. There's just too much customization, too much is happening off-chain, and too many agreements, too many parameters. So it's run like that for a reason. As the institutions are coming, as the BlackRock and JP Morgan and Apollo Asset Management is coming, these companies are used to take custody of users' funds. So when you deposit into an ETF right now, your funds don't stay in your wallet. They don't stay on your bank account. They actually leave your bank account. And it's okay, because the professionalization and institutionalization of strategies and funds that operate on-chain in DeFi is already here. So I don't believe that Gauntlet or Satora, Kirok want to tarnish their reputation by running away with users' funds. No, they want to use regulated and trusted custody solution. They want to use insurance. They want to use the best protocols. They want to do things in a compliant, regulated way. And this is the protocol for that.
That's really well put, actually. Hadn't thought about that in such detail. But look, on types of managers, then, you mentioned all these
Yeah.
different people using it.
Mm.
Who are the types of managers then and protocols actually deploying on vaults today? I mean, you guys support everything from delta neutral strategies to RWAs to yield farming.
Mm.
But yeah, who are these managers and protocols deploying today, and what kinds of strategies are getting the most traction now?
So I think for a long time there's been a lot of delta neutral, market neutral strategies that's been favored in DeFi. So be unchained, stay unchained, potentially enable self-custodian custodial strategies executed by smart contracts without taking custody of users' funds. Now the trend is shifting. So we see more structured products. We see more private credit. We see more directional strategies, algorithmic strategies. So there's a difference between agentic strategies and algorithmic strategies. I would say that right now, irrespective how a protocol or a manager positions themselves, it's most likely an algo strategy rather than an agentic strategy. So directional, algorithmic, on-chain, off-chain, we see a combination. It feels like market neutral on-chain strategies have been saturated. You ultimately also have just a very limited pool of top-tier protocols where you can do market neutral on-chain strategies. And some of the biggest creators, such as, let's say, Gauntlet, Stakehouse, RE7, have already kind of captured and saturated that market. So everyone is kind of doing the same thing using the same protocols. So it's very little room for diversification where people can truly stand out and show the skills, expertise, and diverse world viewpoint is by doing something different. So showcasing that they are the best to source private credit and assess private credit. They are the best to execute private equity strategies and bringing them on chain. They are the best to do algorithmic strategies. This is where the kind of the cutting edge of strategies and vaults. And I am a strong believer that Lagoon will be powering all sorts of strategies, all sorts of assets. It's not just about market neutral. Market neutral feels a bit boring at this stage.
Well, we hope Lagoon will move that way along with many others, right? Because there's a bigger narrative here around tokenization of capital markets. So, yeah, the World Economic Forum estimates that it could save the industry roughly 15 to 20 billion a year in operational costs alone. So someone like Lagoon can play that part. How do you see yourselves fitting into this? Do you see yourselves as infrastructure for traditional fund managers, looking to move on chain?
This is exactly it. This is the reason why Lagoon exists. It's to enable every fund, every manager to actually start their new vehicle, their new strategy much easier and much more cost efficient. Let me tell you this, traditional asset management, which is what multi-trillion-dollar industry, has been undergoing such a margin squeeze over the last 10, 15 years. It's insane. And they know it, and we know it. A lot of the fund operations are super inefficient. So if you can move fund admin and fund operations on-chain and digitize and tokenize, you will save a lot of cost and a lot of inefficiencies. Everything from managing flows, settling your NAV, launching a pooled vehicle, launching a fund, launching a strategy shouldn't take months and months and involve several service providers. It can be done on-chain using smart contracts. Lagoon is exactly that tool. It helps you manage flows. It helps you take fees. It helps you put the right governance in place. It helps users to verify. It helps with your reporting, whether it's tax, compliance reporting, fact sheet reporting, you name it. It's there for that reason. It's tokenization of asset management. Even FCA is talking about it now. So
Well,
it is
yeah,
happening.
FCA, okay, on the regulatory side of things, in the
Yeah.
UK especially, the FCA has published the CP 2528 last October, okay, essentially a green light for tokenized fund registers and new direct-to-fund dealing model. How significant is that for what you're building, and how are you seeing similar regulatory momentum in other jurisdictions?
It's big. Like it's also so that specific publication is also one that I've been talking about for quite a while. It just shows that even the regulators around the globe, and it also includes Singaporean Financial Authority and a few others, are aware that tokenization, settlement of instruments on chain, are bringing the new era to traditional asset management. So my goal and vision for the future is that Lagoon will be servicing not just curators and on-chain risk managers, but hedge funds, VC funds, any pooled vehicle and pooled strategy out there, because they all need the same thing. They all need to manage flows. They all need to manage fees. They all need the tax, the compliance reporting. It's fund administration's function. And this is the reason why we do not dictate the custody solution. Because let's say you're a VC fund and you want to open a new pooled vehicle. So let's say it's your fund number 3 or 4 or 5. Why not now take your flows on chain? Use Lagoon, set up your vault parameters. Yes, it will not be liquid. The users will not be able to exit for a long time. You choose your custody. If you need fiat, you can off-ramp from your custody solution, but all of the accounting, all of the management happens on chain. And where users are ready to exit, they just press 3 buttons and they can follow the flows.
It's completely mad, isn't it? It's
But
getting
it
so
makes sense,
simple.
right?
Yeah, it's crazy.
It's a
And who knows I mean, look, who knows where we're going from here? Obviously, you guys, you're at the crux of this, building the next
yeah.
technology for this new financial system. What's on your roadmap now then? You guys, like,
Oh,
if
so
you
many
could
interesting
say, yeah,
things.
exactly. I'd love to know.
I think, of course, not everything that I can disclose, but the complete life cycle of fund management. This is what we want to do. So we started with the core component, tokenization of flows, management of fees, governance, but there's so much more that needs to be implemented and automated. So this is on our roadmap. To be full cycle fund admin for anyone and everyone who is in this sector, in that profession. As I said, it's VC funds, it's traditional asset managers, it's hedge funds, it's family offices, it's curators, it's risk managers. It's your Revolut with their yield products, which is also coming, by the way. So, and of course, a big thing for every startup and every company right now is AI. Where does AI plays in both the features that we're offering to our users, but also our internal automation. So on our end, it's using the new AI technology like skillfully and mindfully for internal processes where it's appropriate, and also offering our users AI-powered automation tooling where it's appropriate and makes sense.
Where do you see AI helping fund management on Lagoon? Let's say, is it more in analytics? Is it compliance, user experience? You know, are there any partnerships or pilot programs already exploring AI-driven automation within the protocol? Or
Of course, and without saying too much.
Yeah.
I think the question is more, what areas does AI not touch? And honestly, it's difficult to find one. Everywhere we look, every vertical within the industry, let's say, whether it's TradFi, asset management industry, every vertical will be touched by AI in one way or another at some point in time. Not everything will come all at once. And I'm a strong believer in human in the loop. So I will never say that, oh, robots will come and take all of our jobs. It's just not how it will work. And the right thing and the right approach is to always have a human in the loop. Yeah.
Yeah. Look, everyone now, especially, I don't know what's
Mm,
happened in the last 2 or 3 weeks. Anthropic has like disrupted the world, right? We're automating things left, right, and center,
mm,
but
wow,
and we always have humans in the loop. We're just more
mm,
efficient. Each of us in the team is
yeah,
running at
yeah,
4 or 5 times the speed. Yes, okay, there's
mm,
going to be some collateral damage around in the ecosystem of
mm,
business in general, but people will adapt and use these new technologies, and
yeah,
hopefully everything
yeah,
does stay a bit safe. I worry for people like my parents, who might fall victim to some things in the way things are moving.
yeah,
But in our case, we need to be careful with it, but adopt and
mm,
adapt, and we
mm,
are. And
exactly,
we work with a lot of tech
exactly,
companies like yourselves, especially in finance. We're
yeah,
seeing a huge move.
mm, exactly.
Yeah.
It's also
Um.
an industry that, even though has been very good at adopting technology, so traditional financial industry, has been an industry that was very people hungry. So it's been very big teams. So ultimately, if you had a problem, what you would do, you will throw more bodies at it, and it's just not the answer anymore. Whether it's compliance, technology, investments, it's implementing technology, not just throwing bodies at it without the right tool.
Exactly. We're seeing big moves, right? Like I've just mentioned, and
Yeah,
it used to be crazy. I used to talk to founders and ask, how big is your
mm,
team? And they'll be like 40, and we're
yeah,
going to be 50 by the
yeah,
end of the year. I'm like,
yeah,
wow.
exactly.
Now it's like, how
Yeah,
small is your team? You know, how small can you get? Right?
yeah,
It's
yeah,
it's completely shifted.
100%. Yeah.
Yeah,
It's been a KPI, right? So investors has been like, oh, if I see a team is growing, that means the company is doing well. Now, if a team is growing uncontrollably, you should really be asking yourself some questions. So it's definitely not a metric of success anymore.
for real. On our pitch deck, which I've been reviewing recently, I was thinking on the team page, do we
Mm.
just add the brands of all our AI support, right? As logos. Yeah,
Yeah,
may as well.
I I think it poses some like other problems and questions that, especially um, as we scale, as every company scales, they really need to ask and consider. So yeah,
Yeah.
it will
All right. Um, okay. We've got we've
come.
covered quite a bit. Landscape,
Yeah,
tech, um,
yeah,
your roadmap, your view
yeah,
on the market, where we're going and
yeah.
things. I just want to understand a few things on the quality control and protecting depositors before
Mm,
we wrap up, because
yeah,
obviously your platform's now made it so easy
mm,
for people to just come and
mm,
create vaults.
yeah,
Okay, the barrier to entry is super low. But how do you control quality? How do you protect depositors? Uh, you know, um, and Lagoon is permissionless, so anyone can spin one up.
yeah. So everyone can spin one up, but they're not listed on Lagoon front page until we do some serious DD on the team and monitor their performance and management of the vault. So of course, everyone who spins up a vault, they get like a deep link for their test vault. For every user out there, like, don't deposit into things that you do not know or understand. At the end of the day, it's like any other decision, financial investment decision in your life. You need to do your own DD. You need to do your own research. Lagoon as a protocol can enforce certain disclosures, and does exactly that. So we enforce everyone to show the curator wallet, the NAV wallet, the various like roles in a vault, and everyone can see what the track record has been. And this is not something that a vault curator or vault manager can alter. There's an inbuilt high watermark. There's a cool down period for when the fees are potentially changed. So there are a lot of user protection measures that we implement, but we can never safeguard anyone from bad actors alone. So anyone who's operating, so whether you are, buying an ETF or you're going into your own vault, into a vault, you need to understand who's the team behind that actually operates that strategy. What do they do? What is the track record? How well did they perform in the past? What's the background? And does this particular strategy, this particular product is fit for you? This is the type of risk that you want to take. Because one thing for sure, Edward, there's no yield without risk. It just doesn't exist. And the higher is the yield, the higher is the risk. There's a reason why high yield products are ultimately high risk products. So
yeah, totally agree. And we have on the Portals platform now, if you go to the homepage and the Discover page, we have a score system, right? APY is risk. And
exactly.
it's totally true. I saw a few AI spin-ups this week of auto basically finding better yield on one platform and just switching your position into better yield, but it's high risk. It's like, do I really want to give the robot control of my position at higher risk? No, you're right. Look, thanks for summing that up. And you're right. At the end of the day, it's down to the user. And we're going to see more sensible moves as the industry develops and matures, and more security and more information and education for users. So we'll see all that come to part now. But look, I've gone on quite a while. I know your time is precious. I really appreciate you coming on the podcast. So I'm going to do that thing where I cut off and try to wrap up now once and for all. But we do give our guests this question at the end, which everyone gets. It's a bit of a game, but it's just quite interesting to follow this one question throughout the year, because this industry changes by the hour almost, right? So it's interesting to see when I look back at these clips where we are and where everyone's heads at, because very few are bearish. So the question is, today, as per DeFi Llama, the total TVL of DeFi is $92 billion. Okay. What do you predict this number will be in June? On 21st of June, 2026. We're splitting the year in half here, more or less, and we're doing it by the solstice.
I think it'll be 125 billion.
Nice. A steady incline from now.
Nice and steady.
I hope we get there.
I don't believe in large fluctuations over a short period of time. It's not good for us.
Very good. It is not good for us. So it's better to be slow and steady. Well,
slow and steady wins the race.
Yeah, slow and steady wins the race for sure. Nadia, look, it's been great to have you on. I appreciate your time. I'm sorry my connection dropped a bit. For all the viewers out there, I'll do my best to put this together properly. All right. But Nadia, thank you so much. And yeah, look forward to continuing our partnership with Portals and Lagoon.
Looking forward, Edward. Take care.